Listen closely, because this moment in the market is one of those rare turning points that many traders overlook until it is already too late. The chart has been quietly setting up something powerful, and if you understand the structure, you will see why patience right now can pay off big. This is Shah, and today we are breaking down the detailed price action of Aster, currently trading around 0.98, and the story on this chart is becoming more and more interesting with every candle. A few days back, we marked the key support at 0.91, a level that has already proven its strength multiple times. Above that, we identified a major resistance sitting all the way at 1.4, which means that the range itself is wide and provides plenty of room for a clean directional move. On the daily time frame, we discussed the developing cup and handle pattern. At that time, the handle section was still forming, and we talked about the possibility that if the handle extended further down, it could naturally transform into a double bottom right at the support. That exact scenario has now played out perfectly. Price came down, tapped the support zone again at 0.91, held it beautifully, and created that second bottom. When a double bottom forms precisely on a strong higher time frame support, it does not only show that buyers are defending the zone, it also confirms that sellers are losing momentum. In a structure like this, you are basically watching the market build a base for the next upward leg. Now the neckline for the double bottom aligns with the resistance area we have been tracking at 1.4. That is far above the current price, but the distance is not the important part. The important part is the structure, because as long as price stays above the support at 0.91, the overall direction remains bullish. The retest is done, the pattern is valid, and the chart is preparing for a possible push upward. However, because the resistance is still far, the market will not move in a straight line. Aster will likely continue forming higher lows on the lower time frames as it slowly builds pressure. This is what a healthy bullish structure looks like. You see the reaction from support, then a steady shift in momentum, then gradual attempts to reclaim higher levels. Each pullback becomes smaller, each bounce becomes stronger, and eventually the chart approaches the neckline with enough energy to challenge it. Nothing here is rushed. This is slow accumulation. Traders who understand market cycles know that such moves often start quietly, especially on weekends or during periods of low volume, but that does not change the fact that the structure is holding exactly as expected. Support respected, double bottom completed, cup and handle still valid, higher time frame direction still pointing upward. The real decision point will be at the resistance. Once price reaches 1.4, we will see whether the market has enough strength to break through or whether it needs another consolidation before continuation. But for now, the technical picture remains bullish as long as 0.91 stays protected by buyers. If you want more detailed breakdowns like this, stick around and keep following the updates.